Hi folks, it's risky business buying and selling on the stock market. Dan Wofford here with some fresh ideas that may help you grow your money. First, a disclaimer. I am not a financial professional. I am not giving you investment advice. I simply made this video to share how I invest my money and the kind of returns I get, so you can take that into consideration in making your own financial decisions if you wish to. If you have a little money to invest, you're among the fortunate few these days, and you need to take every possibility into consideration to protect your nest egg and realize the greatest returns on your investments that you possibly can. What I do with my money is not buy and sell stocks trying to beat the market, but rather I invest for dividends that provide me a comfortable monthly income with returns you won't believe until you see them. So without further ado, let's jump in. Go with me to tradingview.com/screener. This is a screener that lists stocks in an order that you can choose by clicking on one of these tabs across the top. You can rank stocks according to valuation, performance, income statement, balance sheet, and various other factors. What we're interested in looking at is a ranking by dividend yield forward. So we'll click on the Dividends tab, then click on Dividend Yield Forward. By clicking repeatedly on this tab, you can get a list of stocks ranked from least dividend to greatest, or from greatest to least. What we want, of course, is to look at a ranking by greatest to least dividend. Now, here at the top we have a stock, OceanPal Inc., that shows a forward dividend yield of about 410%. Wouldn't you like to earn a 410% yield on your investment? I know I would. But there's more to the story. Now we want to go over to stockanalysis.com/stocks, and we'll enter OP for OceanPal. First, let's click on the Overview tab, where we'll see that their price performance looks terrible. Here we see that there are no analysts currently following the stock, and if we click on the one-year price chart, we can see why. Their price in the past year has fallen from a high of $6.48 to a low today of only 23 cents. Also, if we click on dividends and look at their dividend history, they have only paid 3 dividends in the history of the company and haven't paid a dividend in almost a year. The reason their dividend yield looks so attractive is because their price has fallen so low relative to their dividend. If they paid another 10-cent dividend today, it would represent almost 50% of their price. Obviously, this is a company in serious trouble, and I would be foolish to invest in it. I could show you other bad apples in this list, but instead, let me show you a couple of companies that I like. First, let's look at OFSS Credit Company with the stock symbol OCCI. Looking at their overview, the one-year chart, we see that their price has varied from a high of $12.42 to a recent low of $8.08, but now it's bounced back to about $9. Now that's a fair amount of variability, but in today's market, it's not all that bad. Looking at the forecast, there are no analysts following this stock. Until recently, there was one, and he was predicting for their price to remain stable around the $9 to $11 range. So it wouldn't appear that there's much opportunity for a return on a rising stock price. But let's look at dividends. We see that OCCI has been paying a steady quarterly dividend from 52 cents to 55 cents for the past 3 years, and that's a quarterly dividend, and 55 cents has been steady since September of 2021. That's a pretty decent record. And looking at the return, at the current price, that's a return of 24.78%. I don't know about you, but that sounds pretty darn good to me. Let's take a quick look at one more stock. Eagle Point Credit Company, stock symbol ECC. Looking at the overview, at the one-year chart, they have a price record similar to that of OFSS Credit Company, ranging from a high of $13.09 to a recent low of $10.16, then bouncing back to a price today of $11.06. Again, not bad in today's volatile market. Now, checking the forecast, we find that there's one analyst following the stock, and he's giving a strong buy recommendation, predicting price growth back to the $13 range. Now let's look at their dividend history. We see that they have a very stable dividend history, paying dividends monthly, ranging from a low of 8 cents to a regular high from 14 cents to 20 cents, and an occasional 45 or 50 cents. The current yield is 22.33%, and that's not the highest it's been in the past 2 or 3 years. I can tell you that I like getting a monthly check of almost 2% of my investment per month. That's about what my local bank is offering on savings for a year. As you work your way down the list in TradingView.com, you'll find that the companies generally grow stronger and safer as the dividend yields decline. I found a comfort zone, and while yours may be quite different than mine, you can probably find a balance between risk and return that is comfortable for you. So that's the story. I check TradingView.com/screener to find stocks that are showing a high dividend yield. Then I research them carefully on stockanalysis.com to see whether or not they appear to be a safe investment. Of course, I still have some exposure to the vagaries of the stock market, but it's very much mitigated by the big returns that I see every month or quarter in dividend payouts. Do your own research and due diligence, take your own circumstances into consideration, and good luck. I hope this helps you obtain the kind of very enjoyable results that I've achieved.